Good evening, everybody. Welcome to your Inner Circle session for tonight. We're doing something a little different than that which we normally do. Taking the opportunity to talk a little bit about a sort of a specific area of the market. We will, of course, do our market roundup to start with, and answer questions as we go. Good evening, Wayne. I've got to say, as we start, thank you so much to everybody for the kind words. Those of you who don't know, I had a little bit of an emergency hospital visit over the weekend, which I managed to escape from yesterday afternoon. So I really appreciate all the emails and support comments on the webinar this morning, etc. So thank you very much for all of those. But on to the important business of today, and just let me know you can hear and see me okay as we just talk through this disclaimer, which is obviously important. It is delivered by myself, and it is a summary of my opinions and trading styles. It shouldn't be taken as representative of co-markets. And obviously, as we talk about this asset class in particular and ways to potentially trade it, then you've got to do your own due diligence on what works for you, whether the information is consistent with your trading plan, and of course, put the appropriate risk management in place. So that all being said, let me know that you can hear me. Thanks, Rachel. Yeah, feeling okay. Cheers, Ross. Good stuff. Right. Okay, let's get into it then. First of all, let's just talk about what's coming across the news right now. Really, we've got a day which is possibly a deal breaker in terms of what happens over the next couple of weeks. We've got equity markets right across the globe doing very well still. We did have a shake-up in commodities over the last couple of days, and we'll talk about that because it obviously has reference to what we're talking about here further on during the session. But what we've got tonight is we've got the Federal Reserve finishing its meeting in the US, and what happens at the end of that two-day meeting is they give us an interest rate appraisal or decision in terms of whether they're moving it or not. In this case, they won't, fairly obviously. But what's going to be vitally important is the subsequent press conference that Jerome Powell, the Fed chairman, will give, and that will move markets. Now, essentially what the markets are looking for is any indication that there's a change in thinking about when the Fed may be tempted to raise interest rates. At this stage, it's priced in for early 2023. So if there is any indication that that may be the case due to inflationary concerns, which I don't think they will express, but what will happen if they do express that, then we'll see bond yields rise, and we'll see equity markets fall. If the Fed remain accommodative, the bond markets have actually sort of accepted that to trade against the Fed is probably not the best thing to do, and hence last week's inflation numbers didn't send the markets as we thought they would. The other thing that is going on is the Fed is like, or the Fed words will be looked at in terms of, and some of the questions will relate to some of the asset purchasing that the Fed has been doing over the last few months in order to help things along a little bit. And if there's any significant decrease in that, then the markets may interpret that as, well, we're getting to a point where we may be seeing some tightening earlier than expected. So really quite an important evening going on. And because of that, we've seen a little bit of flatness in futures, which have remained relatively close to neutral. These aren't much changed since they were from this morning's live update. So you can see there that the Dow's a little bit to the downside. The S&P is pretty neutral along with the Nasdaq. You can see very little movement in the USD. The beneficiaries in the FX space have been the commodity-based currencies, so the Aussie and the Kiwi have outperformed. Also, the GBP pound is looking quite good. That may be due to data that's just come out. We'll have a look at that in a moment. Gold and silver have recovered a little bit from a fairly significant loss, likewise with copper, which had an 8-week low yesterday. And oil just continues to go higher. And I thought it would be a lot longer before we got near $75 on Brent, but we are up there pretty sharpish. We'll just have a quick look at the economic calendar. It is a big couple of days. So there's not just tonight. If you look at what's come across the wires, we got that industrial production number down and retail sales down in China. That was interesting, and the market hasn't responded too negatively to that at this stage. We have got some housing data coming out of the US prior to that interest rate decision. So those figures come out prior to market open. And we've got also there, we have the interest rate decision, most importantly, the press conference, which happens at around about 2 a.m. Perth time, or 2:30 a.m. Perth time. So what's that about? It's about 4:30 a.m. Over on the East Coast. Tomorrow's quite big. We've got some GDP numbers coming out of New Zealand. We've got some employment numbers coming out of Australia, along with the RBA bulletin, and we've got some inflation data coming out of the Eurozone, and weekly jobs data again has come round pretty quickly. So quite a big couple of days, but I would suggest that Fed press conference is going to be the major mover and groover. Let's just look at what's happening in some of the, actually let's just have a look at the indices overall. Just pop on CNBC again. So European markets have edged slightly higher despite that Fed, but nothing major there, really sort of flatlining quite significantly. The ASX was looking pretty strong. Actually broke 7,400 intraday before dropping back to around neutral. Nikkei was the underperformer of the major indices, with the exception of the Chinese index. Nikkei was affected by some fairly poor export data coming out of Japan. And as we already know, pre-market, we are positive on the Nasdaq, neutral on the S&P, and down slightly on the Dow. There is the Treasury yield down below 0.15%, which is sort of interesting. So have a look at some charts just to put some meat around those bones. We are watching the Aussie dollar, Japanese yen. So we like this as a potential bounce trade off this key level at 84.65, and now we're tackling this support, this resistance around about that 84.70 level. So this is looking pretty strong, and maybe up for a move, possibly up towards that 14 or another 14 or 15 pips. So if you're in this already, it's not looking too bad. And you'll see that I am. We talked a little bit about the euro yen this morning, but really didn't, has just looked weaker and weaker as the day's gone on. You can see we've got some support. Those wicks have challenged this 133.28 on the last 4 candles on the hourly chart, which reflects also what happened around about this time yesterday as well. So be interesting to see if we get a breakthrough that level. If we do, there could be a potential move downwards toward again about 30 or 40 pips. This is what we're seeing time and time again, because if you look at the daily charts, we're seeing range bound all across the board. There's range bound with the Aussie yen. The exception to this is the US yen. Let's just take off some of these. We mentioned this morning again, but we are near a key level in that we've got resistance there at 110.20, which it tested earlier on this morning but didn't break through. So that's still one to keep a little bit of an eye on going forward. If we look at the Euro USD, let's just bring this in a bit so you can see, again, looking pretty range bound there. And why is this the case? Well, if we look at the US dollar index, it tells the whole story, really. If we look at there, we've had it stuck at this 90.50 level really for the last 4 trading sessions. That was the close 4 trading sessions ago. Hasn't moved today at all. Long wicks, and so we are in wait mode for the Fed. If we look at how we're doing on the US 500, as I said, we're just so close to record highs again. We actually tested those in intraday yesterday. Nasdaq, same place. Just put the Nasdaq on. You can see that's slightly outperforming at this stage. There's the record highs from a couple of days ago. Touched that, tested that intraday, and then dropped back towards the back end of the session. But you can see again, just to put this, it's always worthwhile putting this into context. If we look at where the DAX is, so the DAX is higher, but again, we're testing record highs, and also, of course, locally with the ASX, we'll just continue to move higher. As I said, tested that 7,400, which is the next key level on this, technically, being a nice round number. If we look at the impact on commodities, we're seeing some sell-off in gold. There's a gold 4-hourly chart. Was looking a little worse than it is now earlier in the session, but have recovered to some degree to be around about neutral at this stage on the daily chart. That 1865 was the key level it broke through. Silver is in the middle of a range. If we quickly look at oil, again, a little pullback today, but really we're on a tear, and we've tested 75 already. If we look at this candle here, whoops, you can see there that the high was 74.80, so it's close to 75. Makes no difference. I must admit, I'm a little surprised at how quickly this has moved up from 70, which was the level we talked about. Remember, this trades in $5 increments, so there was always expected to be a pause at 70, not least because it was resistance there, but likewise 65 there, there's a pullback there. We had a pullback to it before it went up, retested 70, and then moved above. Now copper, let's just put a copper chart on quickly. Actually, we'll maybe delay that. We'll maybe have a look at a copper chart in a moment. So bottom line is, don't try and force trade in this market. If you do, the market will gladly take some money off you. But overall, it's a market that's waiting for some information. I'm just looking down. Cheers, Richard. Hey, Alyssa. Yeah, I've got some catching up to do on emails. I will over the next couple of days. Thank you. Right. Okay, so sorry to hear about your continuing internet problems, Michael. Glad you made it tonight, buddy. Okay, so let's get into the session. As I said, I really wanted to sort of talk a little bit about copper, how it's priced and the influences on sentiment, and the key factors that are involved in copper price movement. Maybe offer a little opinion on the short and medium term outlook for copper. There's many that are suggesting that this is the place to be. It's obviously performed many other asset classes, including Bitcoin, over the last, or really since the turn of the year. And then, of course, finally, of course, how to trade copper. And I'll give you a little bit of an insight into that. So here is a copper chart, really since 2011. The reason this is 2011 highs, which is record highs, and you can see how we broke that within the last month. We'll have a closer look at this in a while. There's the mean price. You can see it's very much over that. We were in long-term downtrend even prior to the pandemic, but after the pandemic, we got slammed almost down to $2, and then up to 470, 479 on the 11th of May as the high. Now, there's various prices you'll see banded around with copper. The one that we normally look at is priced around the $4 It's trading around about $4.38 at the moment, and that's its price per pound. You'll often see on some of the channels, on some of the financial media channels, and some articles you read, it'll be quoted the price per ton, and a ton is £2,205 approximately, with some decimal points. And so currently per ton, it's at 9,658. So just below what is a critical level at 10,000, which is what it tested when it popped up to above that 970 level. So as I said, the previous highs were 459 in 2011, and we broke that by about 20 cents on the 11th of May. Now it does trade on the LME, the London's Metals Exchange, and the NYMEX as the spot price, and to a lesser degree, normally the Shanghai index, although that's been really very, very active over the last, well, since the pandemic. The futures are traded more commonly on the COMEX, and the price that you'll see on the CFD is a CFD of the futures contract, not the spot price. Also, you'll see that the LME and NYMEX, as I've suggested, they also have inventory levels, so they report those on a regular basis. Our governments also stockpile most commodities. China are particularly good at this, so they buy big. When they did it in 2008, 2009, during GFC, they did it again when the pandemic was done. Obviously, why wouldn't you want to stockpile when it's at its cheap price? But that's given them a little bit of an advantage right now in terms of influencing market sentiment, and I'll explain what I mean by that, and certainly been influential in what's happened in the last couple of days. So really, we'll start by, it's termed the king of base metals, and it really leads, you can see it when copper moves, and you can see copper's that orange line there, then other base metals are very well correlated to it in terms of direction, certainly. And so you can see all of the base metals have done particularly well since March here. They've all done particularly well. Nickel's been a little shy, but but really that just sort of illustrates that copper is attractive. It is also very tradable compared to some of the other commodities. It's very liquid in terms of there's lots of interest in trading it, and you'll see lots of hedging going on as well as speculation in trading. And because of its high demand across the board, both in residential, commercial applications, it's a very popular place to be. The other issue is that in terms of its position of availability, it's actually more difficult to get copper out of the ground than some of the other base metals. It's becoming increasingly difficult as we've developed globally. Copper's been significantly used, and it is now a lot more difficult to extract. But on the positive side, it's really quite easy to recycle, and that has probably kept the price down to some degree, but does potentially offer another opportunity, which we'll talk about later. There are many economists over the years that have suggested that copper is actually a leading indicator. Generally speaking, it's a fairly good barometer of economic health. Not surprisingly, if governments are flush with cash, they tend to spend more on infrastructure. Housing buildings, both in housing and in the commercial sectors, tend to do well. So its copper usage obviously goes up. So one of the things that a lot of economists use when they're trying to predict economic outlook is, well, where's copper sitting in terms of copper usage sitting in terms of demand. And vice versa, of course. If there's the idea that we are in for a rocky ride, then we'll see it drop off, much as though we did in in COVID, when COVID first kicked around. Now we'll have a look at a COVID chart. It's really hard just to. I'll have a look at a copper chart, which let's look at it on a weekly basis, okay, just to give you that broad picture again. So actually, let's look at it on a monthly, just to give you the big picture. So this was the last time we hit highs of this level was 2011. Now this was GFC. You can see how much it sold off as the financial world was worried about diving into a depression, and there of course is the COVID decline as well. We're already at a low level, so these low levels were hit in March and April last year, were the lowest we'd seen since 2016. So this, and we've been talking copper again and again over the last few weeks and months on certainly this break of 330 was an interesting one that we referenced then, and then of course there was the crucial $4 mark which it smashed through. And so this pullback we've seen of late is not surprising, considering we've moved up essentially around about 125% since COVID, and since the start of the year. You can see there's the start of the year, it was still only at around about 325, 330, so we've bounded significantly higher since then as well. So that's just to give you context about where we're at. So this idea of economic recovery has certainly pushed this higher considerably. The other thing, of course, as with most commodities, its traded currency is the USD. And so there is some inverse correlation. I've got a little chart I'll show you in a second, although not as obvious perhaps as precious metals. So in terms of direction, we tend to get them moving directionally pretty similar. And of course, extraction and distribution are issues, as well as supply and demand. In the currency markets, the two most correlated currencies to copper are, not surprisingly, the AUD and the Canadian dollar. And indirectly, because there's a relationship between a correlation between the AUD and the NZ, then those are relatively well correlated as well. But it's the Aussie and the CAD, simply because that's certainly of the major currencies that are traded. So here's the USD copper correlation. So you can see there that directionally it's the same, or there's no massive or there's no real correlation in terms of the amount of movement. There's just an inverse correlation in terms of direction. So we've got our high in USD there with our low of copper there. Where it flatlined, we also got flatline in copper. But then there's been this surge over the last few months, whereas the USD has actually sort of found a nice support just below that 90 level that we've talked about regularly. So the correlation isn't strong, but it does obviously have an influence. If we look at production and demand, here's the production by country from last year. It's best I could find. We're in Australia, we're about 6th on the charts. Interesting note, China in there. So China is a net user, and you can see that China, the most up-to-date figures I could find, which weren't released until early this year, were from 2019, which suggested China used around about 51% of the world's copper in terms of demand. And so a massive disparity between some of these figures. We can sort of see, that Africa and Oceania, which includes obviously Australia, use less than 1%, whereas we produce a significant amount of around about 5%, I think, of the world's copper. So this is one of the reasons why China have started to whinge significantly, which has sort of grown in voice over the last few months in terms of the inflation, not only in oil, but also in copper. If we look at the stock levels in the LME, so the London's Metal Exchange, I couldn't find a longer chart than the 60-day, but we can see that really the inventory levels are at a low. It's been on a slow trajectory down over the last 5 years, which again is suggestive of supply issues. It's more and more difficult to get it out. We have a little pickup over the last little while. That correlates, of course, to perhaps a little bit of a tick down in the metal. But you can see there's a 60-day COMEX copper warehouse stocks level, and you can see how that's dropped around about, quick maths, around about 15% even in the last 60 days. So that was since the last contract was, the last futures contract was kicking around. There's been lots of economic opinions relating to what this actually means going forward. And there was a report led by Citigroup, or led and released by Citigroup in February 21, which suggested that this year there was going to be a fairly massive deficit. And this has obviously been part of the reason why copper has surged up as it did. A little continuation into 2022, and then even into surplus temporarily in 2023. I'm not sure how they work this out, but that seems like an awfully long an awfully long crystal ball to try and predict what copper usage will be in 2023. And so I would sort of say, well, look, this is probably a fair reflection of what they see. Now, the other thing that's important is the date on this is February 21. Remember, Biden had just come into power in the US. And so since then, there's been an increase in predicted general infrastructure spending in the US and globally. Biden's come out with his 1.9 trillion infrastructure plan that is still not quite policy, but is gaining some general acceptance. So that obviously is going to be a big addition to this potential deficit. There's also been the significant push, not just in the US, but globally, in terms of, well, now we need to get serious about global warming. We need to decarbonize and move into more renewable energy at a pace. So there's this undoubted change in global energy policy. And every time there seems to be a headline comes across, there seems to be more and more urgency and a greater desire to push these forward. Some initiatives come in that even push those things forward even more. Now, because copper is a highly efficient conduit, it's used in renewable energy plus right across, and it's suggested that up to 12 times more copper has been used than in traditional systems because of its increased efficiency. And of course, on top of that, we've got recyclability. So that again makes copper an attractive metal to use in this particular sector. Now, so everything's going along tickety-boo. We obviously got we look back at that chart again. We obviously got, let's actually have a look at a copper chart on just watch Zoom, by the way, if it breaks 370. We talked about that this morning, but I'm still liking that, particularly with the Nasdaq looking slightly positive. But we're going to put copper on here now. I'll just give you a little bit of info about this. So this is a copper futures contract, which actually expires in 2 days. So be careful with this if you're thinking about a long-term hold, but it will roll over. But there just may be some increased volatility and some slight disparity in price as the contract rolls over. But what we had essentially was this massive run-up that we've already talked about. Unfortunately, the pricing is only here since April, but you can see that massive run-up and then that pullback to really what was those 2011 highs. And it looked as though it was comfortable there, looked as though it was even pushing forward. And then we got some PPI data coming out of China last week, which upset things a little bit. The Chinese weren't very happy, and one of the things they were looking at is the inflated price that the industrial world, the businesses are paying for copper. So there was already a natural pullback after a 150% increase. and really this was only around about 6%, so a normal pullback that we would expect to see. Anything, and again, to put into context, we're only just touched 10%, which is correction territory, and haven't broken through that. So it wouldn't surprise me to see it trying to find a bottom here for right now. But we'll come back to that in a little while. So we've got massive up move from somewhere down here, normal retracement, and then we got a couple of days ago where we got it dropping. Essentially, if we look at the length of this candle from top to bottom, it's around about just shy of 5% in a day. And this is as a result of this. So because China have been stockpiling this, there's been suggestions from nothing definitively said, but there has been some suggestions that they may start to use, based on some of the rhetoric that is becoming increasingly twitchy, that they might start to use their stockpiles rather than going onto the market and buying some more copper. That would obviously reduce the demand in terms of the actual buying of the new metal. But in May, which is obviously a month ago, many analysts were predicting copper could double in the next 3 years and hit that 20,000. I remember that's 20,000 per ton. It's currently around about 9,000 or 9,500 per ton at this stage. So whether this Chinese concern is simply is simply a short-term blip in what otherwise remains a bullish context or not remains to be seen. Really, the jury's still out from a technical point of view. So I've said all that essentially, and there was a break of that 50 EMA. So if we look at this, well, let's pop a 50 moving average on this. So technically, this wasn't surprising to see that selling occur. So we got a breakthrough 450, which is that level there. So it tested it a couple of times. So technically we've got to break through that, and we've got to break through the 50 EMA. So markets looked at that and thought, right, okay, as is often the case when we get a break of a technical level, that's going to precipitate some more selling. So it's an interesting one. I suspect that even though there is this increased Chinese rhetoric, whether they're actually using stockpile or not remains to be seen. But there's an undoubted short-term trader sell-off of this based on the potential for that. But of course, there's a technical signal as well, which not surprisingly pushes it down. So my view in terms of this is not a long-term reversal of a very well-established bull run, and is merely a repositioning of some of the market participants until we get some more information about how fast the economy is growing, how much China is getting twitchy, and whether we do start to see some decrease in volume of buying, which we're not at the moment. Watch those inventory stock levels, then that's all sort of in the balance yet. So the long-term impact, I suggest, is not key. The long-term issue remains a massive deficit in supply versus demand over the next 12 months as a minimum. And in light of what's happened since that report in February, one would expect a greater continuation of that into 2022. So if we are looking to trade copper, how can we do this? Well, as I've indicated, Go Markets recently added copper futures CFD to its tradable suite of commodities, and its pricing is based on a 3-month futures contract. So what happens is the futures contract rolls over in September, in 2 days, in June, in September, in December, and in March. Okay, so the contracts roll over, and during that time, what happens is some people will take it's a contract which will involve a physical delivery. If you actually got the futures contract, remember this is a CFD, not the futures contract, it's a CFD of the futures contract. So if you're holding the futures contract and you didn't roll it over, you would have to take delivery of copper. Okay, so most traders, most brokers, most institutions will be just keen to roll it over. And of course, as with any commodity, there's many companies that may hedge copper at specific prices, both to the upside and to the downside. So the fact that it's added to the suite of tradable commodities is great news. And obviously, like any of the instruments on MT5, you can trade it long or short. The minimum contract is 0.1 of a CFD, and obviously USD, as we've already said, is a traded currency, and you get exposure to £25,000 of copper per CFD, and it trades 23 hours a day, has an hour's break along with the rest of the commodities at 5 p.m. New York time every day. So if we look at the current, because obviously it's got to convert back into Aussie dollars to show, and it's really important you understand the pricing of any instrument you're trading, how it might impact, because it can come as a little bit of a shock. Okay, so if we look at the current AUD USD spot, which the pre-L will be converted into your account if your base currency is Aussie dollars, each 1 cent move in copper gives a very approximate $32 move for every 0.1 in your PL. Now, I'm not sure what happened to there. The ATR over the last 3 months has really sort of ranged between 9 and 10. It hasn't changed much. So I'm going to take you to the, let's just show you what I mean by this. So I actually entered a position earlier today at 435.20. Okay, so $4 and then 35 cents and then 35.2 cents if you like. It's currently trading at 433.95. So essentially we are about 1.4 cents down on where we opened, and you can see it's around that $42 mark. Okay, so that's how it's priced. So just be aware of this, and I would suggest that even if your account is pretty healthy in terms of balance, start by trading this level here until you get used to the pricing. Okay, now I'll place an order on as well so you can see the spread. So we're certainly not going to enter 100. We'll enter 1 and we'll do this long as well. Let's just do a quick scan. Yeah, I'm quite happy doing this long. So we'll do 0.1. Okay, so there we go. That's the size of the contract. It's a 5% margin. Okay, or if you've got a professional account, can't remember what it is. If you've got apologies, I can't remember what it is as a retail client, but check that out. But you can see the spread there. Okay, so 433.85, 434.25, so about 0.4 of a cent difference. Okay, so if we buy this by market right now, you'll see we're $12 down to start with. So I just wanted to show you that. I don't mind being in these for right now. I just wanted to show you that, just so you get some clarity on the pricing and on the spread. That spread will, of course, alter during the day, but not significantly so. It sometimes goes as high as 0.7 I've seen, but not higher than that. As I said, it is a very liquid futures contract, and hence is a liquid CFD contract as well. So that's really important in terms of understanding if you are going to trade this. Now, one thing I would say is because of this rollover in 2 days' time from the June expiry contract to the September expiry contract. From memory, this normally happens at 12 o'clock or midday New York time. So overnight as far as you're concerned in Australia. But most brokers and liquidity providers will have rolled over prior to that stage rather than being involved in some fairly scary some very scary trading at the end of any futures or options contract. That often tends to happen. But it's worthwhile if you are getting interested in this. It's worthwhile being a little cautious if you are going to trade before that time. So just an extra note on that, because there will be increased volatility and possibly a price move of some description. Either way, but it won't be massive, but it'll be. It's another reason just to be cautious. Now, of course, we don't have to trade the futures contract. There are other options as well. Oz Minerals are the two ways to trade this on the ASX. Oz Minerals, and we'll just pop up a chart, which were going great guns, and then dropped off, as you can see, because it's almost a pure copper play. And interestingly, you can see it's popped down to support at 23.57. Because Oz Minerals essentially is primarily a copper company, that's going to be particularly sensitive. The other one that we can trade that's in the top ASX top 200 is Sandfire, and again you can see that significant fall. So just in percentage terms, we saw Sandfire drop nearly 6%, again back down to a support level. Interesting that it's touched this 50 EMA there. And Oz Minerals, I think we're down around about 5.5%. So those are the two key plays in Australia if you're wanting to just trade stocks rather than the underlying commodity. If we look at something like BHP, now of course BHP and Rio have got a significantly sized copper mines across the globe, but in terms of its proportion, or in terms of the proportion of its business, is significantly less than that of Oz Minerals and Sandfire. So BHP, of course, dropped today, like all of the resource sector, and really have had a rough couple of days, but only dropped 1%. So be aware, just be aware that although BHP and Rio and some of the bigger companies internationally have a major copper interest, then it's not going to be as pure a copper play, or it's going to be a less pure copper play than either those companies which primarily or have as a primary part of the business being copper extraction and distribution versus something like the diversified miners. So you can certainly have a look around that if you so choose. Okay, I'm going to get some questions in a moment. As I said, Sandfire are the other ones, and that should have been base metals, not B metals, moving in tandem. But obviously we had oil moving up whilst we had copper moving down. So of course, again, BHP and Rio have got a fairly major oil component to their business. So we've got one just dampening down the impact of the other. Now, also interesting, and not one that it was one really that sort of I thought more about when I was actually putting this together. I haven't thought about it before, but because of the recyclability of copper, then obviously scrap metal dealers in scrap metal companies doing that are obviously a beneficiary of an increase in copper prices. So if we look at Sims, which has a ticker code SGM, you can see once again we had that. We've really had a. There was where copper hit its high, and a pullback. We had some good stuff going on with Sims generally, but so that was the 11th of May where it hit it high. It hit its high, where copper also did. But you can see this move down today. Again, not quite as severe as the copper producers, but nevertheless did move. But it is one other way that you can potentially play that. Sims are actually a very fundamentally a very strong company going forward. Now in the US, the primary player is Freeport-McMoRan, which I've spelt wrong on the slide that you're going to see in a minute, but you can see there was that 50 EMA, smashed through that as though it wasn't even there, was already looking weak, and there you can see a 7% drop essentially in the session. So very brutal overnight last night for Freeport. But again, if we look at where it hit its high, which was there, you can see that's around the 11th and 12th of May, where copper was there as well. Again, a company which has a very good fundamentally, very good operationally, and so again, just to put this into context, we look at a weekly chart, you can see how well this company's done. Actually, in the worst of the pandemic. So if we look back, I think we've got data back. No, we don't. So even in August last year, this stock, to where it is now, stock has moved up 181%, which is good, just quite staggering. So very well thought of as a company, really got their act together. So there was all sorts of issues. They changed their CEO last year, I believe, and many of their operational policies. So this is a good company potentially fundamentally for the long term. Now, so there is, and then of course you can trade the Aussie and the CAD as the most commonly correlated FX pairs, but there are other reasons to trade them, and I wouldn't be that interested in trading copper using those. It's just another support or otherwise for those currencies doing well over the next few months. So as with any new vehicle, you need to make a choice. You need to familiarize yourself with the pricing, test your technical strategies before you scale. I've said start at the lowest denominator just so you get used to how it moves. And again, of course, we've got a longer term process, which I'll just briefly reference. If you are trading the share CFDs rather than the underlying metal, so the underlying metal is going to be responsive to any economic data that is indicates how the health or otherwise of the economy globally. So Chinese data, US data, big US data is going to influence. With share CFDs, you've got to have the earnings report to that, of course. Lots of copper resources around. Probably my favorite is kitcometals.com. If you haven't got this on your radar, I'm just going to pop it in there. You can get historical charts, you can get lots of opinion articles, but just be aware, much of it is opinion. But I'll just paste that in chat there for you. Guys, okay. And just be aware, things are changing at a very, very rapid pace at the moment in terms of what's happening. Even since February, all of those things are referenced, are pretty game-changing. So just be aware of the dating, the potential dating of any opinion articles that were less or more than even a month and a half old. So just to reinforce, remember we talked about this before in other contexts, but here's the process you would essentially use if you're looking to put on a long-term idea. So you've got a bullish copper medium term, infrastructure spend, rapid acceleration in the move towards renewable energy, increased cost of mining, which is going to make supply or precious supply, decreased off copper inventory. That should have been US dollar remains weak. But then, of course, you've got to include the counter argument. So the Chinese pullback due to commodity inflation is important, and much of the increase in demand is not yet policy. So a lot of this infrastructure spend, a lot of the renewable energy stuff is not yet policy. It's things in the making. Then you look at the potential impacts of copper futures, material stocks, and commodity-based currencies, and really then you define your potential approach. So long-term accumulation strategy into futures contracts could be a way, and some exposure in specific stocks. Or if you have got a heavy interest in copper futures, you may diversify diffuse the impact with some diversified miners. Now, the reason for doing this is this gives you the reason for exit. So if we see the US dollar getting stronger, if we see this Chinese inflation becoming a worry, them stopping to buy, we see policy dismissed, then all of a sudden, some of our major reasons for getting into this are gone. And so if we're using fundamental reasons to get in the long term, if those start to change, then that's our exit. That we can refine it with both, we can refine it with with timing of technical entries, of course, and there we go. Okay, so I hope that's been sort of interesting, useful in giving you some greater insight into copper. Obviously, review the materials covered today. Make a choice as to whether some exposure for you in copper, either short-term or long-term, in whatever form could be right. And as I said, just to reinforce, test your existing strategies before putting any major investment behind this. Futures, Ross. So all the CFDs are on futures. Next support level, is it time to buy copper now? Interesting question. I think 435 is the next support, or is the support we're at now. If we're going to bounce off that, I think we could see we could see it bounce quite nicely. Stephen, it is. So you were likely to see a lot of things going up. Does copper trade 5 days a week or 5 days a week, Andrew? So it's very similar. Yes, of course, Ross. I didn't mention journal throughout that, but of course you journal what you're doing. And yes, great comment, Douglas. Thanks for that ad. Douglas has suggested that electric cars use 4 more times of copper than all power cars. Obviously, that's another factor in the equation. Okay, guys, well, thank you very much for all the kind feedback. Thank you for all your participation in the session. I hope that's given you some stuff to chew on. Just watch out for a special session that we're running. It is nearly the end of quarter, so I'm inviting the magnetic trading guys along, possibly on Monday, to chat about potential about their end of quarter trades, which are invariably very clever and very productive. The ASX, I don't think, has lost ever since they've been trading it. So keep your eyes out for that, as well as taking care, trading safe. Enjoy the rest of your evening, and bye-bye for now. And thanks once again to everybody. Night all. See you later.